Okay. So in the previous class, we spoke about derivatives, right? So in this class, we are going to talk about corporate actions, which is very, very important. In each and every interview, there will be questions from the corporate actions because these corporate actions will have a huge impact on the NAVs, cash, and position movements. That's the reason we'll talk about these corporate actions. Both in terms of investment banking and also in terms of fund accounting, it is very important. Okay. So first we'll understand what is the meaning of corporate actions. Normally, these corporate actions are related to the companies which are publicly trading. We call it as the listed companies. After IPO, every company will be listed in the stock exchange, right? So the events, whatever the events initiated by the publicly traded companies, again, which will have a major impact on the securities and shareholders' wealth and everything. So those impacts and those events, we call them as a corporate actions. Suppose there is a company, TCS company. If they're announcing some dividend, you know what is dividend, right? If they're
Yes, sir.
announcing some dividend is also one corporate action. Suppose the TCS company is purchasing another company, they're acquiring another company. That is also one corporate action. Suppose one company changing their company name. Earlier it was operating as a ABC Limited. Now they are changing it as a XYZ Limited. That is also corporate action. Like that, any significant event, major event, again, which will have an impact on the publicly trading securities and also the stakeholders, shareholders, wealth, everything it will impact. So those kind of actions, those kind of events, we call it as corporate actions. Okay. We have normally a board of directors will take this corporate actions events based on the majority of the voting rate and different parameters. They will take these initiations and they will implement these decisions. That is called corporate actions. So we have basically two types of corporate actions. Not two types, we have three types. So let me discuss those types of corporate actions here. I'll write here types of corporate actions. Yesterday we had one interview with a company called Invesco. There also we had a question about corporate actions, what kind of corporate actions we have, what exactly it mean by like that. We have questions. So here we'll talk about types of corporate actions. One is voluntary corporate actions, mandatory corporate actions.
Mandatory.
Mandatory with choice.
Mandatory with choice corporate.
One is the mandatory corporate actions, and another one is
Voluntary.
voluntary
Voluntary
corporate
corporate
actions.
actions.
Voluntary and a mandatory with choice.
Choice.
These are the two types, three types of corporate actions we have this. So we will discuss one by one what is a mandatory, what is voluntary, what is a mandatory with choice also. First we'll go with the mandatory. Mandatory means each and every shareholders need to be part of that specific corporate action. If management is taking a decision, everyone should comply with that. Suppose if management decided to change the name of company, it will apply to all shareholders. Even if you're not able, if you're not agreeing for that specific corporate action, still it will impact your positions. It will impact your value of a stake that you're holding in the company. It doesn't require your any permission. That is called mandatory corporate action. Maybe to take the decisions, they may need a voting rights or something. But once management has taken the decisions for the specific event, then it will impact all the shareholders, irrespective of your opinion, irrespective of your choice or something. It will be implemented on all of the stocks. That is called mandatory corporate actions. Voluntary corporate action means management will come up with one action, one event. If you want to be part of that event, you can go and participate. If you don't want, you can ignore that. But it's a voluntary for you, up to you. If you want, you can go and participate. If you don't want, you can ignore it simply. That is called voluntary. And a mandatory with the choice means we are talking about mandatory means it will impact each and every shareholders irrespective of their opinion and their decision and approval. If company is announcing some profits, as a shareholder, if you are holding any share, as a shareholder, if you are holding any share, you will get a dividend, right? Yes or no?
Yes,
So
sir.
again, while receiving a dividend, company will give you two choices. While paying dividend, company will give you two choices. What is the choice? Do you want a dividend in terms of cash or in stocks or shares?
Securities.
If company is announcing dividend, if you want, I'll give you 100 rupees cash. Or else the same 100 rupees worth shares also I can give you. Any one thing you can choose. That option a company is giving. So in this case, we call it as a mandatory with choice. It's a mandatory. You have to choose. But on choosing also, you have two options: cash or shares. Which one is required? That you can choose. That is called mandatory with choice. In fact, dividend is the only corporate action where we have a mandatory with choice. Okay. Now we'll go in depth. First, we'll start with the mandatory. Mandatory corporate actions. Can anyone name a few mandatory corporate actions?
Dividends.
Dividends.
Okay, let me write here.
Bonus.
Stock split.
Reverse stock split.
Winding up of company.
Sorry. Dividend.
Stock splits.
Bonus issue.
Stock split. If stock split is, there is another one similar to the stock split. What is that?
Bonus.
Reverse
Spin-off.
stock split.
Bonus of shares.
It's a reverse stock split.
Merger and acquisition.
Mergers and
Spin-off.
Spin-off. Then
Bonus. Issuing bonus shares.
Mergers and demergers.
mergers.
Rights issue.
No. We are talking about
Mandatory.
voluntary. It's a
Mandatory.
mandatory.
Liquidation
So
of company.
bonus shares. The liquidation of company. Then
Changing the name of
Demergers.
Bonus.
bonus is not a mandatory. It's a voluntary, guys. We'll talk about it in the voluntary actions. Okay, bonus is not a mandatory. It's a voluntary corporate action. Okay, so let's start. I think we have received all these things. So we'll start with these types of mandatory corporate actions. If you can discuss all this, it would be fine. Okay, first one, we'll start the dividend. What do you guys know about this dividend? Can anyone tell me the process of dividend? When the dividend will be issued? And what is the process while announcing a dividend by the companies? How we will receive the dividend? Like
If a company having good profit, then they will distribute the profit to the investors.
In the
They'll
form of
be
dividends.
first and they'll be first announcing after that certain date will be given. On that day, dividends will be settled in the investors' account
Mhm.
in the form of cash or stock.
Okay. Suppose if I'm holding one share in TCS company, I'm holding 10 shares. Okay, let's assume it is on 8th May 2024. Okay, and TCS company has announced a dividend on 9th May. When they have announced 9th May 2024, they have announced a dividend. Okay, so normally we know, right, what is the trade life cycle? We discussed about it, right? Trade life cycle.
No, bro. I think we have not.
So we didn't discuss the trade life cycle about the phases. Front office, middle office, back office. What we do in the each phase. We didn't discuss that.
Yes, we have discussed.
Then, so what is the trade life cycle in India?
T+1.
T+1. Maybe in few countries it is a T+2. So if I purchase my trade, that will be settled in tomorrow only. If I'm selling my share, maybe the dividend announcement is on 9th May. The company has announced a dividend on 9th May. Maybe they're paying like 5% of a dividend they're paying it to the shareholders. Okay. If I sell my share on 8th May, as a seller, am I eligible to get a dividend?
No.
No. Yes. Actually, yes. On 10th, from 10th onwards, the trade will execute in the.
Suppose if I am as an investor, if I am purchasing the same shares on May 9th, am I eligible for this dividend?
They are going to give some record date. On that date, if you have, we will get dividend. Otherwise, you don't get.
If on the record date, if he was the owner, then he will get the dividend.
Okay. Let me clarify remaining students also. So guys, try to understand. Suppose they're announcing some dividend. I know you guys have studied a few basic concepts in fund accounting and investment banking, but let's remaining students also understand about the concepts. So on May 9th, they're announcing the dividend. After announcing the dividend, if I go and purchase a share on 10th May 2024, am I eligible to get this dividend? So basically, after announcement of dividend, definitely people will show interest to purchase more number of shares in the same company because they can get a more dividend. I mean, additionally, there will be a capital, share as well. In addition to that, they will get dividend as well, right? So for that reason, definitely people will show an interest to purchase the shares and invest into the TCS company shares. So to whom I have to consider as an eligible persons and whom I have to pay this dividend, there is a lot of confusion. Basically, the determination of eligible persons for this dividend distribution, not only for this eligible distributions, for every corporate actions. If you want to decide to whom it should apply, from when it should apply, there should be some confusion, right? Simply, I'm saying it is an announcement. On 9th, they're announcing a 5% dividend. It doesn't mean that on 9th May itself, the dividend will be paid into the shareholders' account. If I'm announcing a dividend, again, that may settle after 1 month, or even after 2 months also. There will be possibilities in such case. So for that reason, every corporate action will have a specific dates. So every corporate action should undergo these steps. The first one is announcement date. Announcement date. Then we have a X date. Then we have a record date. Finally, we have
Settlement.
settlement date. So these are the important dates every corporate action will have. Just give me a minute, guys. I'm getting a call. చెప్పవన్ చెప్పు Sorry, guys. So every corporate action will have all these dates: announcement date, X date, record date, and settlement date. Even before we discuss about all these corporate actions, types of corporate actions, we have to talk about these dates. We'll talk about it one by one. First one is announcement date. So here we discuss about these many types of corporate actions, right? We have a dividend, and we have stock split, reverse stock split, mergers, acquisition, spin-off, liquidation. For every event, there will be an announcement. So where they will come and they will conduct a board meeting and they will get an approval from all board of directors and they will come up with an announcement. So that is called an announcement date. Basically, the specific corporate actions and what is the impact and what is the size of impact. All these things will be announced on the announcement date. That is called announcement date. Simply, they will inform it to the all stakeholders, including the entire public and all. They will inform it. That's we call it as announcement date. And we have an X date. X date is it's a cutoff date. Why we need this cutoff date? As I mentioned earlier, if you want to determine the eligibility persons, if you want to determine the eligibility of the persons, we need to have the cutoff dates. So for that reason, company will maintain one cutoff date. Suppose if you are purchasing the share before this X date, understand very clearly, if you have purchased the share in any company before this X date, you will be eligible for this dividend. You will be eligible for the specific corporate action. For that reason, there will be cutoff date. So the cutoff date is nothing but X date. Are you getting understanding? Hello?
Yes, sir.
Yes, sir.
Yes, ma'am.
X date is nothing but cutoff date. For every corporate action, to determine the cutoff date, we have an X date. So before X date itself, you should have purchased the shares. Then only you will be eligible for the specific corporate action. What if, sir, if I purchase after X date? Not eligible. On X date, not eligible. Before the X date only, you should have purchased any share. Then only you will be eligible for the specific corporate action. It will impact your positions or it will impact your shares if you have purchased before X date. Then we have a record date. So record date means basically to maintain the register of investors. And every like if you want to list out all the eligible shareholders, I need to maintain one register, right? Record of registers. So basically on the record date, the list of shareholders will be listed. So if my name is available in the list on the record date, if my name is available in the list of registers, list of investors, then I will be eligible. How, sir? Already they are giving X date as a cutoff date. What is the purpose of having this record date again? Are you guys getting doubt? Already X date they are giving. If I purchasing before X date, definitely I will be eligible for this dividend. But again, why again this record date? What is the list of investors? As we are discussing, we have a trade life cycle in T+1, right? T+1. That means if I purchase my trade today, when it will settle? If I purchase my trade today, when it will get settled?
Day after tomorrow.
Tomorrow.
Yes, please.
Not day after tomorrow. It's a tomorrow only, guys. The transaction date plus 1 day. That means tomorrow it will get settled. So the difference between X date and record date should be the trade life cycle of the specific exchange. Suppose in India we have a T+1. So X date, if X date is 8th May, record date will be 9th May. So if I purchase date on 8th, it's not possible, it's not accurate whether I can get settled by 9th May or not. But if I purchase it on 7th, if I purchase it on 7th May, definitely my name will be listed on the record date. That's the reason we are saying that the security should be purchased before X date. That means before 8th May only you should have purchased the shares. Then your name will be listed in the 9th May. So basically the difference between the X date and record date is the trade life cycle of a specific stock exchange. In India, it is a T+1. Suppose if in the other countries, if it is a T+2, even in India also we had T+2 earlier. In this case, what would be the record date?
10th May.
What would be the record date?
10.
It would be the 10th. 10th May. If it is T+2, the record date will be 10th. Who will decide all these dates? Who will decide the X date? Who will decide the record date? Basically, record date will be decided by the board of directors, company.
X date.
Company will decide the board of the record date. And who will decide the X date?
Exchange.
Exchange. The specific exchange will decide the X date. Why X date will be decided by this stock exchange? It depends upon the trade life cycle of the specific stock exchange. Stock exchange will announce the X date. The so-and-so company has announced a dividend. The record date is 10th May. As per our policy of trade life cycle in our stock exchange, if you are purchasing before 8th May, you will be eligible for this dividend. So 8th May is the cutoff date. Like that, exchange will determine the X date. Okay. Then we have a settlement date. What is the settlement date? A dividend will be paid to shareholders on this date, settlement date. Dividend will be paid to the shareholders on settlement. So basically, we need to understand all these dates. Every corporate action will have these dates: X date, record date, and settlement date. Again, I'll repeat one more time. What is the announcement date?
Announcement date.
every corporate action will be announced on the date. That is called announcement date, declaration date. We also call it as declaration date. And what is the X date?
Cutoff date.
It's a cutoff date. So when should I
Before X
purchase?
date, we are eligible.
Yeah, before the X date, we should have purchased the securities. And who will decide this X date?
Stock exchange.
Okay.
Or
And who will
exchange.
decide the record date?
Company board of
Record date is a company or board of directors.
Board of
So board of directors will decide the record date. And what would be the difference between X date and record date? What would be the difference between X date and record date? The number of days between difference between X date and record date
T+1 or T+2.
depends
T
upon the
plus-
stock exchange
T-
trade life cycle.
Mm.
It can be T+1 or T+2. And what is the settlement date?
The
The
date
dividend will paid to shareholders.
shareholders will get benefits.
Yeah, where the amounts and cash will be settled. We can say settlement. The dividend will be credited to the
Paid to
shareholders.
shareholders.
Bank account. That is called settlement date.
Settlement date.
Payment will be paid out. Dividend will be paid out on settlement date. Okay, these are the important dates for the dividend, especially for the dividends only. We'll get a lot of questions about this kind of dates related to the corporate actions. Okay, now we'll go and discuss about the dividend. So we understood about dividend. What is dividend? It's a part of profits. When company has equipped with some profits, that will be distributed to the investors on a proportionate basis. So on announcement date, company will announce like maybe they are paying for 5,000 rupees. Let's take it as in values because we may have to write few general entries. So that's the reason I'm taking it as a 5,000 rupees. Okay. Suppose let me. They're announcing 5% dividend. If I'm holding few shares, let's assume I'm holding 100 shares in the same company, in the TCS company, and dividend for my 100 shares would be 5,000. Let's assume I'm going to receive this 5,000 rupees dividend for my 100 shares. Okay, understood everyone? How much dividend I'll be receiving?
5,000.
5%.
5%, which is nothing but 5,000 of
5,000.
my 100 shares. As a value, I'm taking it as a 5,000. Okay.
5%
Here I'm
of
saying-
what actually? 5% of what actually?
It's actually the face value. They will announce it on the 5%, 10%. The dividend will be issued on the face value of a share. If you're
Okay.
holding 10%, 10 rupees of a share and 5% on face value, the dividend will be paid.
Okay.
Okay. Then let's assume I'm holding these shares from long back. I'm holding this from last 1 year. Last 1 year. So when I'll receive this dividend, 5,000 rupees,
At settlement date.
on settlement date. Maybe let me write the settlement date also here, 12th May. Okay. And the announcement date is 5th May. Okay. So announcement date is 5th May. Even before this 5th May also, I'm holding this number of shares, 100 number of shares. So my dividend would be 5,000 rupees. That's how I calculated somewhat, some random figure I'm giving. So 5,000 rupees dividend. Okay. So am I eligible for this dividend?
Yes.
If I'm holding this share from last 1 year, which is nothing but
Yes,
before
sir.
this announcement date, am I eligible for this dividend?
Yes, sir.
Yes.
Okay. Maybe I just purchased this dividend on 5th May. Now, am I eligible for this dividend?
Yes, yes.
Yes.
Eligible.
Yes, eligible only.
If I'm purchasing the shares on 6th May, am I eligible?
Eligible.
Eligible, sir.
Is everyone understanding?
Yes, sir.
Yes, sir.
So in the previous discussion, we understood the corporate action dates, X date, record date, and settlement date.
Yes, sir.
So now I'm giving different scenarios and different
Yes, sir.
dates. So it depends on those dates. Based on those scenarios, you need to let me know, am I eligible for this dividend or not? Okay. If you have confusion, just stop me and ask me there itself. It's very important.
Oh,
And
okay.
8th May. If I'm purchasing share on 8th, am I eligible?
Not eligible.
Not eligible.
No, sir. No, sir.
So which
Before
is why
accident,
I'm not
we are
eligible.
eligible.
Base
You must
Before
purchase
the
before.
Before
income.
It's an X
For
date.
X date.
So it's an X date. So even if you are purchasing on X date, it's not eligible. Okay.
It is a
Then
cutoff date.
yeah. Suppose if I purchase the share directly on the record date, directly I'll purchase it on the record date. Now, am I eligible?
Not at all.
No, sir.
Okay. Now we understood, right, about the different dates and when I'll be eligible for this dividend. It can be on settlement date, it can be on record date.
Yes.
Still, we will validate it from the X date perspective only. If you are holding share, if you are purchasing the share before X date and your name is available on the record date, then you are eligible for the dividend. Okay. Now,
Yes.
let's understand. Let me talk about from the fund perspective. Okay. We have a fund ABC, same example. Instead of as an individual, we have a fund ABC. In the fund ABC also, from last 1 year, I'm holding 100 shares. For the 100 shares, I'll be receiving this 5,000 rupees dividend. So when I will record it as a income in my books of accounts, in fund book of accounts, in fund accounts, it's an income, right? If I'm holding 100 shares in the TCS company, TCS announced 5% dividend. So as I'm holding 100 shares as a fund, ABC fund holding 100 shares, ABC fund will receive 5,000 rupees dividend. Is it an income or expense to the ABC fund?
It is income.
Income. When I should record this income?
Settlement.
On settlement
On
date, 12th,
settlement.
12th May.
Settlement.
On settlement date. So how we will record the settlement date as I received dividend like that? Huh? Hmm?
5,000.
Yeah, 5,000. So you'll be recording on the settlement date as 5,000 cash received in the form of dividend. Right? Is that what you're trying to say? Is that what you're trying to say?
On record date, we are going to
Incorporated.
write as receivable. On settlement, we are going to write as received.
So someone has raised the concept about receivable. Directly, without writing this receivable, can I write an entry on the settlement date as I received cash dividend? Can I write it? Normally, which system we are following for the accounts? Cash system or accrual system? We have two concepts, right? Cash and accrual. So which one we are following? Cash or accrual?
Accrual.
I think already we spoke about accrual systems also, right?
Accrual
Yes,
concept.
yes, accrual.
Accrual concept only we follow. Accrual means it doesn't matter once if it is an income. If you feel it has been earned, then we have to account it in the books of accounts. Maybe we will receive it later. That time we will cancel the receivable and we will record it as a cash received. So similarly, we have this much deadlines. On May 5th itself, I came to know is I'll be receiving 5,000 rupees dividend. On May 5th itself, I know, right? Because I'm holding the shares from last 1 year. I'm pretty much sure definitely I'll get this dividend 5,000 rupees. But I will receive this dividend on 12th May only. So now tell me, when I should record the accrual as it's a receivable for me, it's an income for me, when I can consider it as an income?
On announcement date itself.
Maybe 5th is announcement date. I can record it as an accrual. Again, 6th, I can sell it, right? I can sell it, right?
Yes, yes.
So, is it a fair method to account it on the account announcement date?
What on settlement date?
On
I think
settlement date.
on record date, received.
On record date. So on record date only you'll be knowing whether you are eligible for this dividend or not. When exactly you will be knowing whether you are eligible for this dividend or not. When you will come to know?
On record date.
Are you sure?
Yes, sir.
They will consider only ownership on that date only. No?
X date.
Basically, to list down the list of shareholders, we have a record date. So only on record date you will be knowing like you are eligible for this dividend.
Yes.
Not even before that.
X date also you can know.
After X date, on the X date itself.
On the X date, you will be knowing, right?
Yes.
If you are holding share before or on X date, whenever you purchase, but when you will come to know whether I'm eligible for this dividend or not? On X date only, right?
Yes.
I'm holding the shares from last 1 year, but when it will get confirmed? On X date only. It should hold before X date. So on X date only, you'll come to know whether I'm holding the share before X date or not. So on X date is the where it is establishing the right of receiving dividend. You are holding a share before X date. Maybe you can sell it and then record it also. You can sell the share and record it also. But still, on X date, you're eligible. Your name will be appeared on the record date. You will receive the dividend. So on X date only, you'll decide whether we are eligible or not. So basically, the accrual entry will be recorded on the X date. As a fund, accrual will be recorded on the X date. Accrual entry will be posted on the X date. So what is the accrual entry for the dividend income? Can anyone tell me? What is the accrual entry for dividend income? Let's tell me normal entry for dividend income. BCom, MBA students. Manas, are you there? Chinna Tirupatama. What is the entry? Hello. Ramesh Babu.
Yes, sir.
So what is the entry for dividend? Anyone from this group? No one is from commerce background.
Dividend.
Dividend
Dividend
account
received.
or cash
Receivable.
Dividend receivable account data to dividend income.
Dividend receivable account data to dividend income account. Come on, complete it.
Dividend receivable account data to dividend income account.
Dividend receivable account data to dividend
Dividend income account.
income account.
Yes.
Can you explain me how it will work?
Dividend income means revenue.
Okay. Why we are debiting and why we are creating these accounts? I need an explanation. మాకు అవంతా ఎందుకు తెలుసు నెట్లో ఎత్తుకున్నామో వచ్చింది చెప్పినాము అంతే. Okay, no problem. Let me explain. See, it is an income, right? So whenever we are receiving income, if it is direct cash entry, how we will record cash account debit to the respective income account. It can be dividend income, interest income, whatever it is, incomes will be created. Why? It is a nominal account. What is the principle for nominal account? What is the principle for nominal account?
Debit all expenses
Expenses
Debit
and
all
losses,
expenses,
credit all
debit
incomes and gains.
and losses, credit all
Credit all
incomes.
incomes. So here the income is dividend, right? So we are creating the income account. But are we receiving the cash and accrual date on 8th May itself? Are we receiving the cash? Are we receiving the cash on 8th May? No, right?
No.
No, sir.
No.
No, sir.
So we yet to receive. We yet to receive means it's a receivable amount. So receivable we have to debit. Why we have to debit this receivable? It's an asset. Until we receive, we have a right of receiving the same dividend amount. So right has been established. So we are considering this as a asset. So dividend receivable account debit to dividend income account credit. Okay. Let's come to the settlement date. When we are receiving cash and cash receiving. So what would be the entry on cash receipt? We are receiving cash, the same dividend amount you will be receiving on 12th, the same 5,000 rupees. Now tell me, what is the entry? What is the entry?
Dividend.
We are receiving cash, right? So which account we have to debit?
Dividend.
Dividend.
Which account? What is the account name that we need to debit?
Shareholders.
We are receiving cash. So cash is one account, right? Is a real account, a nominal account, or a personal account? Cash.
Real account.
All accounts, sir.
So what is the principle for real account?
Debit what comes in, credit what goes out.
Credit
So
what goes out.
So which item is coming in this case?
Cash.
Cash.
Cash. So let's debit the cash account. Cash account, debit 5,000 rupees. And what is the next credit account?
The person who
Dividend.
gives the cash.
Dividend.
Huh?
The person who gives that cash.
Who gives
Dividend
the
account.
cash? Why the person is coming here?
Dividend.
See, an accrual, we debited this dividend receivable account, right? As we had to receive from so and so persons. I mean, the income receivable account. Now we are receiving the cash. Still, do you want to maintain this account?
No, sir.
We
Totally.
wrote it as a receivable. So on 12th, we are receiving it. So still, do we need this account?
No.
Do we need this account?
Dividend received account.
So we can cancel this 5,000 rupees as a dividend receivable, right?
Yes.
If you want to cancel, what we can do? We can just simply credit it. Here we debited. So if you can credit the same account, it will get set
Debit.
off. So
Credited.
to dividend
Received.
receivable account. How much?
5,000.
5,000 rupees. These are the general entries from the fund perspective for the dividend. Everyone understood? Everyone.
Yes, Mahesh.
Yes, Mahesh.
Yeah. The next one, this is all about the cash. We do not have much things to discuss on the cash. So we spoke about different dates involved in the corporate actions and also the dividend part, how the entry will be recorded. Now we will see the dividend with a mandatory choice. Here we spoke about cash balance. If cash is receiving, we are recording it as a cash received. The company can give you the chance, the company announce different choices. If you want cash, cash will be paid. Otherwise, it may give you an option to choose the stock as well. What is the stock? This is all about cash dividend. And it may give you the stock even. How company can issue the stocks instead of giving cash balance? This TCS shares having this many shares. Already you are holding 10 shares, right? 100 shares. And you will be receiving 5,000 rupees of dividend. So based on the current market price, company may announce different stock as well. If you need 5,000 rupees cash, 5,000 rupees cash will be paid. Otherwise, 5 shares will be paid. 5 shares or 5,000 rupees cash. Which one you want? Company will ask you like this. In this case, you can choose either if you need 5 shares, you can go for the 5 shares. If you need 5,000 rupees cash, you can take this 5,000 rupees cash also. Anything you can consider. This is called mandatory with choice. Understood? Only for the dividend, we have this kind of situation. Company will give you the option to choose between cash and stock. This is called mandatory with choice. It is available only for the dividend. Is everyone understanding?
Yes, sir.
Yes, Mahesh.
Yes,
Now
sir.
we will discuss bit complex concepts. Okay, we will discuss the cash movement and position movements. You know what is cash and positions? What is cash?
Cash.
ABC fund will have a
Cash.
cash. ABC fund may have a cash. Similarly, positions is nothing but number of shares. Positions are nothing but number of shares. What? Number of shares. How many shares this ABC fund having? That is nothing but positions. Okay. Now let's come to the dividend point. So in case of a dividend announcement, on X date, record date, and settlement date, we will receive the dividend. Is there any impact on the cash because of this dividend? as an ABC fund holding 100 shares in TCS company. Company has announced cash dividend 5,000 rupees. Now, will it impact our cash balance or not?
Cash
Yes,
balance is going to rise.
it will
You
Yes.
go
guys
up.
are sure? You guys are sure, right?
Yes.
Yes.
sir.
So with this dividend, there will be impact on the cash balances. Yes, there will be cash impact. Cash impact, which is talking about the dividend. Yeah. So in this dividend, cash impact will be there. What about positions? Number of shares will also going to change. In case of cash dividend, I'm highlighting only the cash dividend, talking about only cash dividend. Okay. In case of cash dividend, there will be impact on the cash. Yes. What about position? Number of shares? Is it changing?
Remain same.
No
Same.
change. Okay. No change. Why there is no change in the number of shares?
We opt for cash only.
We opt for cash. Only the cash balance is changing. We're not receiving any number of shares, and we are also not losing any number of shares. We're holding 100 shares in TCS company. The same 100 shares will be there. So there is no change in the cash, I mean the positions. But the cash balance will increase. Okay. Now, what about price? Price of share, TCS share. Let's assume the TCS share price is trading on 1200 rupees. With this announcement, share price will increase or reduce?
Decrease.
Remain same. No change.
Increase.
Increase or decrease?
Okay.
Price will fall, decrease.
Why it will decrease?
Because company is sharing their profits, right? So that's why the stock price will be falling down.
Yes. So the company is issuing this dividends from which part of a asset? I mean, which part of a balance sheet item? We understood about the balance sheet, right? In our liability side, we have a capital reserves and other liabilities. And asset side, we have a tangible, intangible assets and investments, fixed assets, and we have current assets as well. We understood this, right? So from which part of a item that dividends will be paid? Dividend means what exactly? Dividend means a
Sharing
profit, right?
profit.
Profit.
Yes.
Profit is nothing but reserves and surplus. We have a reserves, we have a profit. Profit we are paying. We understood the three elements of balance sheet, right? Equity, liability, assets. Do you guys remember this? I think when we are discussing this fund accounting, we spoke about this part. Let me go back to this. Where is this concept, guys? Somewhere we spoke, right? So equity somewhere. So, where is this concept? Somewhere we discussed, right, about the equity and equations and everything. Do you guys remember it or not?
Sir, equity shares.
Hmm? No, I'm trying to look for that balance sheet. Yeah, here only, right? See here. So basically, we understood this equation, right? Equity plus liabilities is equal to asset. So from this, the balance sheet, we have a capital reserves, which is all about equity part, and we have loans and liabilities and assets part. From which item the dividend will be paid? From which part?
Liability.
Assets.
Assets, sir.
From reserves.
Equity,
Liabilities.
equity,
From
capitals and
reserves.
reserves.
From
In the
reserves.
equity side, we have a reserves. So reserves are nothing but profits. So from this profits only dividend will be paid. We are paying in the form of cash. So cash balance will also reduce in the company accounts. But it's a part of reserves. There should be a source, right, for the dividend payment. What is the source? Profit. Profit is nothing but this reserves. So dividend will be paid out of this reserves. So whenever there is a payment of reserves, give me a minute, guys. Ready? So guys, so from the equity part, we have reserves and surplus. So we are paying from the reserves. Just understand whose part it is, equity, capital and all. Whose capital, whose reserves it is.
Owners or owner's capital.
Owner's capital only, right? So you're using your own owner's capital, owner's equity. It is nothing but equity. Equity is all related to the owners only. You are using it from the reserves and you are paying as a dividend. Basically, you are reducing your own balance. So whenever there is a reducing of reserves and balance, capital side, whenever there is reducing of equity side, there will be reducing of share price. Okay, whenever there is a reducing of from this part, whatever it is, if reserves or capital is reducing, the equity is reducing. Now we are having 1,50,000 plus 35,000, total 1,85,000. If it is becoming 1,80,000 or below 1,85,000, definitely share price will also reduce in the market. Because that's a net worth, right? Net asset. How do we calculate net asset? We'll to calculate the total assets minus this liabilities.
Minus liability.
The net worth. So this entire equity part itself is reducing. The net asset value of company is still reducing. So definitely share price will also reduce. Understood? Everyone. So share price will decrease. Everyone understanding?
Yes, sir.
Mahesh.
Yes, sir.
Mahesh,
Now we'll talk
actually,
about.
I have another case also.
Tell me.
After receiving dividend, so many
There will be
shareholders.
increasing of a there will be increasing of a share price in future, but not now. Okay. Potential investors will feel like, okay, this company is paying this much profit. Let's go and invest in the share for higher price. So company share will increase in the long run. But for the instantly, we understand from the corporate actions perspective, which is impacting our security market prices. So security market price will reduce the same extent. Suppose if company is announcing 5%, 5,000 cash is going out, the same extent, 5% of share price will also reduce.
Okay.
Okay. Now we'll understand the NAV, net asset value. So in the previous classes, we spoke about net asset value. Okay. Now I need to know, will my NAV of a fund will impact or not? Net asset value of fund will impact or not?
It will impact.
How it will impact? Will it increase or reduce?
Reduce.
Increase.
How
It
it
is
will
going to
reduce?
increase. It's going to increase as cash balance increases. So fund NAV also increases.
Let me understand one more time. What is net asset value? The assets minus liabilities, right?
Yes, sir.
So what is the asset value here? As a fund, we are holding 1,000 shares, right? Let's assume 1,000 shares. What is the value of 1,000 shares? Each share price is 1,200 rupees. So we have 100 shares into 1,200 rupees. So we have 1,20,000 on the asset side. Everyone understanding? Very, very, very important for me to understand. So listen very carefully. So this is the assets. Okay. We have 100 shares, which is worth the 1,20,000. Let's consider only this asset part. If asset is decreasing or reducing, net asset value also should change, right? Right or not?
Yes, sir.
Let's assume we have a cash balance also. Cash balance also we have 10,000. So here we have a total assets how much?
1,30,000.
Let's forget about the asset liabilities part and everything. Only asset value. If asset is decreasing or increasing, then only there should be change in the net asset value, isn't it? Because dividend is impacting only the assets, not liability. Is there an impact on liability? If we are receiving a dividend, is there any impact on the liability side? Is there an impact on the liability side?
No,
No,
sir.
right?
No, sir.
No.
No, sir.
Only on the asset side. Cash is an asset. This investment is also an asset. Now let's understand. So 1,30,000. Let's understand before maybe the dividend announcement and all. We have this 1,30,000 share worth. Now they are announcing dividend, this 5%. So we are going to receive the dividend for 5,000 rupees. Right?
Yes.
So if I am receiving this 5,000 rupees, what I will write in entry on X date? What I would write? As a dividend receivable, dividend income, right?
Dividend income.
So dividend receivable I'm going to receive it, but not at received. Is it an asset or a liability?
Asset.
Asset.
Asset only, right? So maybe in the asset side, I will record dividend receivable account. So how much?
5,000.
5,000. So 5,000 I'll record. Sir, it's increasing, sir. Net asset, total asset is increasing, right? So you're saying that net asset value is increasing, right? Right?
Yes,
Yes.
Mahesh.
Yes.
But we also understood this concept, right? Share price will reduce to the same extent. Before dividend, okay, 1,200 rupees share price we have. So we have 1,20,000. And on X date, you're saying that we have a receivable out up to 5,000 rupees. Share price will also reduce from 1,200 rupees to the 5% less, right?
Yes,
We
yes.
understood, and dividend day share price will reduce. How much it will reduce? Currently, which is trading at 1,200 rupees minus 5%, because 5% is a dividend, so it will reduce to how it's 5%. What is 5%, Anna? 1,200 into, sorry, 1,200 rupees into 5%. How much? Shit. 1 second, yes. 60 rupees. So 1,200 rupees share price will become how much?
60.
1140.
1140. Now, if I recalculate the security prices, same 100 shares we have into how much price? 140.
1140.
Is it correct? $1,200 minus 60. 1140. Why it's showing like 40,000? Sorry, in this case also I have to consider the dividend amount as a not 5,000. Here also I need to reduce the same 5,000 rupees from the total value. The same extent. Suppose if I am receiving 5,000 rupees, my equity will also reduce to the same 5,000 rupees. So earlier I had a 1,20,000 total share value. So I need to understand the dividend percent, because here we didn't consider the exact percentage rate. As a cash value, we considered 5,000. Here 5%. But these are not actually matching with the 1,20,000. That's the difference we are getting. So let me understand in a different way. We are receiving 5,000 dividend. So our value of our investment also reduced to the same 5,000 rupees. So it will become 1 lakh. How much? Minus 5,000 rupees dividend.
1,15,000.
It will become 1,15,000. Again, we have 1,30,000. So is there any change on the total NAV because of this dividend receivables dividend?
No.
Okay, we are sure, right? On accrual date, there is no impact on the NAV. Why there is no impact? Why there is no impact on NAV?
In the
There is no change in assets. But sir, we are recording it as a receivable, right? 5,000. So assets should increase, right? Again, we have a concept called decreasing of share price because of the dividend. So whenever there is a decreasing of share price, we are holding the same 100 shares in the TCS company, right? 100 share price will become 1,15,000 only. Earlier we had 1,20,000. Because of the dividend announcement, it went down to 1,15,000. So
Yes, sir.
1,15,000, dividend receivable 5,000. Both are set up. Again, we have 1,30,000 only. Maybe we'll check in the dividend cash received, sir. We are receiving cash, right? So let's record this cash balance. Where should I add the cash balance and settlement date if I receive the dividend? Where should I add? The cash balance only. Earlier we have 10,000. Receiving of this cash, it will become 15,000. So now again it's increasing, right, sir?
5,000 minus.
This dividend receivable, we record as a receivable and an accrual date. But again in cash entry, we are reversing it, right? So I need to make it as 0. So I'll reduce this 5,000 rupees from the dividend receivable. Again, any change?
Yeah. No.
Everyone understood this concept?
Yes, Mahesh. Yes.
Yes, sir.
So understand, guys. No change in the dividend also.
NAV.
Very important. For each and every corporate action, we will discuss this point. The cash movement, position movement, price movement, and NAV movement. Very important parameters. If you are working in a fund accounting, we need to understand these things. Without this understanding, many of the candidates not even aware about all these concepts. Even if you go and work with any fund accounting guys, having experience 3-4 years also, if you go and check with them, even they're not able to answer these things because these are coming from the root. So we need to understand the roots actually first. So we understood the dates. What are the dates we have in the dividend, X date, record date, and settlement date. We understood when we should post the accrual entry, when should post the settlement entry, what is the record date, what would be the difference between these two dates, who will decide each date, who will decide the announcement date, who will decide the X date, record date, we understood. And when coming to the fund perspective, as we are fund accounting, when working in a funds, we need to understand, is there a movement in the cash or not? Yes, we understood there is a cash movement. Okay. Similarly, the positions. Is there any change in the positions because of the cash dividend? Is there any change?
No change.
No change.
No change.
Is there any change in the price of share?
Yes.
Yes,
Yes.
there is decrease.
In dividends, there will be price changes. We are saying that it is decreasing. And also we should understand the reason why it's decreasing. Why it's decreasing?
David has been sharing.
Profits are distributed out of equity. Whenever there is a dividend distribution, that should go out of the reserves only. From the equity only, they should distribute the profits. So whenever there is a distribution of equity, whenever there is a reducing of equity, the net asset value of that company will also reduce. So obviously the share price will also reduce. Okay, then NAV of fund, net asset value. So again, understand it from the fund perspective. As a fund, if I'm holding any share, my assets or my liabilities should impact. Then only my NAV will change. What is the formula for NAV? What is the formula? Total
Total assets.
assets
Assets
minus
minus
liability.
liabilities other than equity.
Other than equity.
Other than equity. So basically, we are reducing the total assets minus liabilities. So there should be change either in total assets or liabilities. Then only our NAV will change. Right?
Yes.
Either there should be a change in assets or liability side. We understood as a dividend, there is no any impact on the liability side because it's an income. So whenever there is an income, only the asset side will impact as a cash balance or maybe the receivable balance. So we are good about the NAV formula. So we understood from the asset perspective. We have our assets earlier. How much assets we have? 1,20,000 and cash balance 10,000 we have. So on X date we have to record it as a receivable. So we'll record it as a receivable. Definitely you'll get a cross question. When you're recording it as a receivable, your asset should increase, right? Yes, it should increase if it is a receivable increasing. But at the same time, what is reducing? What value is decreasing on the same date?
Share price.
Share price. Because these are the shares. Because of changes in the reducing of the share price, we are holding the same shares in the same company. So our share investment value will also reduce to the same extent. Whatever the amount we are receiving, to the same extent, the share price will also reduce. So our investment value also has reduced. Again, there is no change in the total assets. Maybe on accrual date, there is no change. What about on settlement date? We are receiving cash. We are just converting this receivable to cash. That's it. We're increasing the cash balance and we're reducing the receivable balance. Again, both are in the asset side only. Is there any change again?
No,
No
sir.
change.
No, sir.
Everyone understood this concept?
Yes, sir.
Yes, sir.
Yes.
Any difficulty? Hello, someone was trying to say. Any difficulty in understanding these concepts? Hello, is everyone clear with this dividend concept?
Clear.
Yes, sir.
Yes. So let me take a break here. We'll give it a pass. You guys need to understand the entire concepts. Again, by tomorrow, when you're coming for a next class, you should understand these concepts. So thoroughly go through all these dividend record date, settlement date, and X date, and when we will record the accruals, what is the entries for the accrual, and about the price movement, cash movements. It's not something like we should remember and by heart. Just in a conceptual way, you should understand. Maybe it will take some time. If anyone asks you about what is whether it will be a cash movement or not in case of dividend, stock split, reverse stock split, It will take some time to think and to explain them, but it's absolutely fine. It can take time, can take a pass, and we can understand the impact and we can answer them. But we should understand it from the conceptual wise. Not we should not by heart. We should not remember it something. Okay, everyone understood?
Yes, sir.
Yes, sir.
Any questions on this dividend part?
No, sir.
Any questions on this dividend part?
No.
Okay. Now we understood the cash dividend part. Basically, how the cash
Yes,
can
yes,
be
one
involved,
second.
right?
One second.
Now you guys need to prepare the similar kind of parameters changes for the stock movement. Suppose if I'm choosing it for the shares, here I choose about cash dividend, right? If it is a stock dividend, we have a mandatory with the choice, right? If it is with the stock dividend, what will be the impact? Stock dividend. So I need a clear representation like this. What is the cash movement, number of shares, NAV fund of the fund, and asset? Everything I need an example like this from everyone. So I need this example by tomorrow. This is your assignment. But tomorrow you are attending. I need this assignment. Okay. Yeah, someone is trying to ask something. Go ahead.
Mahesh, actually, some companies, even though they are getting profits, they won't announce dividends. Like Meta and Google, that companies
Hmm.
won't announce dividends, even though they are getting profits. Why that is happening? You are saying like dividend is mandatory, but they are
Again,
not
you are
announcing.
no. Mandatory means it doesn't mean that definitely you should announce it. Mandatory from the customer shareholders perspective. You are thinking in a different perspective. Understand, guys? Suppose if company is announcing dividend, everyone should go and participate. You cannot deny the dividend. Understand from the shareholders perspective.
Okay, from
Mandatory is the
shareholders.
choice. Mandatory
Yes,
is the
bro.
voluntary is for the shareholders, not for the company.
Okay, okay.
Correct.
If
Yeah.
company is announcing, go and participate. You cannot deny the dividend. You cannot ignore the dividend. Understanding? Your total approach is incorrect.
Yes, yes, understood.
If company have a profits, they will go and announce it. But we are talking from the shareholders perspective. Let me tell you one more example. You know about buyback shares? If company is having excess cash, suppose here, let me understand in a different way. Same TCS shares having 1 lakh shares. Okay, 1 lakh shares with the publicly traded shares at 1 lakh. TCS company is having a lot of cash. Company is having a lot of cash. Though normally they have issued shares to the public in order to get a capital, in order to get a cash, right? But after a few days, few years, TCS company is having a lot of excess cash. Even without, withholding all this cash balance, still they are issuing shares to the public. Shares are trading in the public. They have to pay some dividend to them, right? If someone is holding a dividend, share, definitely they have to pay dividend.
Yes, Mahesh, yes.
So why should I pay dividend? I have excess cash. So what I'll do, I'll purchase back my own shares. I'll keep it with me.
Yes.
TCS company is thinking like, why should I pay dividend? Why I issued my shares initially? Because I need a cash. So I issued shares. I got a cash. But I have excess cash. I don't know where should I invest. So I invest on my own shares. Already this 1 lakh shares are trading in the public market, right? Public. So let's purchase 50,000 shares from the public.
Yeah.
50,000 shares from the public itself. This is called buyback. Buying back. Initially, we issued the shares, we sold the shares to the public. Again, we are buying back same shares from the public. Why I am doing this buyback? Because company is having excess cash. Even with having this excess cash, if continuously paying a dividend, it's a loss for the company, right? Why should I pay excess dividend? If I hold my shares, I don't need to pay any dividend to anyone else, right?
Yes, Mahesh, yes.
Yes. Now, company is announcing this dividend. This buyback. What is the company is announcing? Currently in market, the same share is trading at 120, 1200 rupees. If company is asking people, company's share is trading at 1200 rupees, I'll give you 1200 rupees, give me my share back. Will you give it to him?
No.
No.
You may not.
Voluntary
I may not.
corporate
Yeah.
action.
You may or may not, because I hold this share. I have a right. So is it mandatory to give it doesn't mean that you're asking I should give it to you immediately. No. It's not a mandatory because it is my own share. My share it is. You cannot For sure, you cannot coerce me. You cannot force me to sell it to you. Company will do one more thing. Currently, it is trading at 1200 rupees. I'll give it 1250 rupees, which is more than market price. Normally, this is how buyback will done. If there is X,
Buybacks
if there
are
are,
issued at a discount price.
yeah, if there is asking it for the same price, why should I sell? Maybe if they're asking for a more than market price, maybe I'll think about it because they're asking for more. I can sell it to them and I can get a more profit. For that reason, company will come and quote a higher price than the market. In this case, also, is it mandatory for you to sell it to them?
No, it is not mandatory.
It's not
It is
mandatory. This is called voluntary. This is called voluntary. Again, we have one more thing. Companies announcing name change. Name change. Companies are going for the changing of company name. No. For my shares, I have to keep it as old name only. Will you be able to say like that?
No, you can't say.
If
No.
company is changing the name, the updated name should reflect in all share certificates. Maybe you're holding 70% shares, 50% shares, 10%, whatever it is. If company is changing the name, then updated name, the new change will reflect on all shareholders. We cannot deny this. We cannot deny this company. No, I don't want to change my company name. It has been approved by majority of the shareholders. It has been announced. So we have to comply with that. This is called mandate. Now we understand the difference between voluntary and mandatory.
Yes, Mahesh. It is a shareholder's perspective.
Yeah, from the shareholders' perspective.
Yeah.
Whether to
Correct.
participate or not to participate. That is called voluntary and mandatory. You are thinking from the company perspective. Is it mandatory to pay dividend? No, it's not mandatory. Companies, it
Okay.
doesn't mean that every company will have a profits. No, few companies may have a continuous losses also. We discussed about equity part and the preference shares part, preference share capital, right? There also we discussed company will have a chance to go for losses also. They won't pay any dividend.
Yes, Mahesh.
Understood?
Understood.
Yeah. Anyone have any questions? Anyone else?
No, Mahesh.
No, sir.
Any doubts that needs to be recorded? Who is a Singham iPhone? Singham iPhone. Who is that?
Navin.
Naveen.
Naveen. Which Naveen?
Singham Naveen. From Hyderabad, yesterday we talked, no?
Okay, understood. From Ematicus, right? Okay. Okay, let me stop the recording.